Ladies and gentlemen, good day and welcome to the ORIENTBELL Limited Q1 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Das from Pareto Capital. Thank you, and over to you, sir.
This is Rishabh Das from Pareto Capital. We represent investor relations for ORIENTBELL. On behalf of ORIENTBELL, I welcome you all to our Q1 FY22 earnings conference call. I have with me from the management, Mr. Aditya Gupta, Chief Executive Officer, and Mr. Himanshu Jindal, Chief Financial Officer. We will have brief opening remarks from the management, followed by the Q&A session. Please note that certain statements made during this call may be forward-looking in nature. Such forward-looking statements are subject to certain risks and uncertainties that could cause our actual results or projections to differ materially from these statements. ORIENTBELL Limited will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. I would now hand over the call to Mr. Gupta for his opening remarks. Over to you, sir.
Thanks, Rishabh. Good afternoon, ladies and gentlemen. I welcome you to the Q1 FY22 earnings call. Joining me on call is Mr. Himanshu Jindal, our CFO, and Pareto Capital team, our investor relations advisor. The last 3 quarters of FY21 were fantastic for OBL. However, the resurgence of COVID in April, followed by lockdowns, impacted construction activities. With cases rising and numbers transitioning to names, many of our stakeholders were impacted adversely. What started with curfews and market timing restrictions soon evolved into state and district specific lockdowns. This created a huge ambiguity, which meant that production or cost saving calls were not as binary as they were last year, same time. COVID has demanded that we transform across multiple planes and reimagine every process from customer interactions to supply chain and manufacturing. Our strong focus on digitization since 2018 has enabled us to surmount these challenges posed by COVID. In Q1, we have continued our drive towards excellence and focused on areas that are relevant for medium to long-term scale-up at OBL. Our branding investments have continued, and so did our efforts to build product, distribution and displays. We have added another category, large slabs, to our product offering. With this addition, the total new product categories introduced since FY21 is 6, and these new categories cumulatively added 9% to our top line during Q1 FY22. Distribution expansion was also on track with the addition/revival of 68 channel partners during the quarter. This number is in addition to the 400 plus channel partners that we had added in last fiscal year. Again, we have added 8 more OBTBs, which is the ORIENTBELL Tile Boutiques in this quarter, our display counters, taking the total count of OBTBs to 238. We have used the lean period in Q1 for imparting training to our workforce and for maintenance of our manufacturing facilities. Our focus to strengthen execution capabilities continued with the hiring of 43 people in Q1. Adoption of digital tools, which are unique to OBL, is getting stronger by the day, helping to make buying and selling of tiles easier for all our stakeholders. Markets have now resumed and we see demand gaining momentum, and we believe that this will help us bounce back strongly. Now I request our CFO, Himanshu, for financial and other updates. Over to you, Himanshu. Thanks.
Thanks, Aditya. Good afternoon, all. The resurgence of COVID definitely impacted our volumes and thus profitability during quarter one. While the lockdown was beyond our control, we did well on a number of other counts. So our pricing was up 6% YOY and also sequentially by 2%, supporting the sustenance of our gross margins. Our product mixes improved as well, primarily GVT, which is now 19% of our total salience. With this, our vitrified mixes and even our HVP mix is now at 43%. Like Aditya mentioned, we did improve our distribution. We added more CPs and also more OBTBs. Our production grew 5-fold versus the last year, and yet our finished goods inventory was largely unchanged. On the balance sheet front also, we remain strong, and we continue to have best-in-class cash conversion, which is 25 days on a like-for-like basis versus quarter four. This means that we continue to be cash positive despite COVID and the payments that we continue to make towards the growth capex announced last year. Costs are going up, so is WPI. You can see that very clearly there, and this impacts margins. While the cash fixed costs were optimized sequentially, our investments on all the medium to long-term strategic fronts continued. So we did invest on people, on manufacturing, and also on marketing. In fact, our marketing investments were higher in both absolute as well as relative basis versus the last year. With all of this, we were able to reduce our EBITDA loss to 3.7 crores versus 8.8 crores last year same time. Our PAT loss also reduced to 5 crores versus an 11 crores a year ago. Additionally, on the capex projects, so there are two updates. One is on the modernization of our volatile plant, which is MP1 at Secunderabad. This is underway and should get completed within the timelines that we've set and also within the agreed budget. Yesterday, we have also announced a new growth capex for debottlenecking our existing GVT line at Secunderabad, MF4. This should add another 0.7 MSM capacity by early FY23 and would cost us less than 11 crores in capex. This means that the project is going to be capital efficient as well. I think with this, we can now request the moderator to open the lines for Q&A. Over to you, Rishabh.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit Suresh from Samitva Investment. Please go ahead.
Yeah. Hi, sir. Good evening. I just had a couple of questions. My first question was, I just wanted to understand on the capex that you have incurred for the current financial year as well as for the years going ahead. Is it fair to assume that majority of those will be for the value-added segment? First, I wanted clarity on that.
Yes, so Rohit, thanks for the question. You're right. I think we are spending more on value-added, growth capex. In fact, I did a review of what we did over the last 2 financial years. Almost 70% of what we are spending over the last 2 years was on ROI capex, very clearly. The 3 new capex that we have done between October till now, these are all ROI capex, so which includes what we did with MF2, which is the restart of that line, then the modernization and also now the debottlenecking of the GVT lines. So I think that will continue.
Okay. So my second question was based on your product mix. This quarter, the vitrified ratio has increased to around 43%. And I understand that it's basically because of the second wave impacting the rural where ceramic was a larger base of customers. So going forward, how do you see for this financial year and maybe even the next one? Will it be sustainable? Can it be around 43-45%, or will it come back back to around 40-41% going forward?
Good afternoon, Rohit. So, improving the vitrified salience at OBL has been a strategic focus area for us. We have talked about it in the last two earnings call also. And that focus has resulted in the ratio going up from 40% to 43% over the last 4 quarters. We continue to working on this, and this is something that we expect to keep growing. As mentioned earlier in earlier calls, some of our competitors have almost 60% of their revenues coming in from vitrified tiles, and that is the long-term number that we would like to hit.
So is it fair to assume this quarter maybe it was a one-off because of various macroeconomic factors?
No, I haven't understood why do you feel it was a one-off?
So because historically ceramic tiles sales would have reduced in rural areas. So if you would have achieved sales what you were achieving in Q4, so would the ratio have been more or less same as you have reported, or would have it been around 40-41%? That's what I was trying to understand.
So my sense is that vitrified, so last year was 40%, and my sense is that vitrified percentage will be an improvement over last year. In FY22 would be better than FY21. Secondly, in terms of, you talked about rural and urban markets. So in this quarter, we have seen that our Tier 1, Tier 2, Tier 3 sales are largely the same as compared to last year. There is no significant change there. So I don't think the urban-rural mix is going to impact this product salience.
Okay, great. So thank you so much and wishing you all the best.
Thanks, Rohit.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Ritesh Shah, who is an individual investor. Please go ahead.
Yeah, hi. This is Ritesh from Investec. So 2 questions. One, you indicated that we have forayed into large slab market. I just wanted to get a sense on how big the size of the market is and how do you see this product scaling up for us?
Okay, Ritesh. So we started, we launched our first large slab, first size, which is 800 millimeter by 2400 millimeter in April. But because of the lockdowns and all, the first supplies could commence only in the month of June. These slabs are being used for kitchen counters, for bathroom counters, and in some cases also for flooring. Very early days yet, as I said, supplies only commenced from the month of June onwards. We expect, we are getting a good traction from our channel partners, and we are getting good queries from new channel partners who are primarily in the stone business and they don't do tiles. So can't give you an estimate of how much sales we would be able to do. As I said, very early days now. But the attraction of this product for us is, it gets us into a totally different set of solutions where OBL was not available earlier. Secondly, it is a much higher ASP product. Our average selling price for the company for the quarter was about 250 rupees. And this product is almost 4 times that, about 1000 rupees ASP.
Okay. Just correct me if I'm wrong. Is this something which is on an outsourced basis or is it on captive manufacturing?
Yes, it is outsourced.
It is outsourced. Okay, that's perfect. Second question for Mr. Jindal. Sir, how should one look at the cost inflation, say from 1st of July And are there further price hikes which were taken in first week of July, like the other tile makers have done?
So, Ritesh, so yes, cost inflation is hurting, which is clear. The gas price is now trading, is around 841 now, which is way higher than what we had even sequentially now. So this is bound to have an impact. Now, how much of that would be transmitted to the markets in what form? This is still something that we are introspecting. Some portion of this has obviously gone to the markets. You would have seen something already in quarter one results. Even from a prospective basis, we have taken a bit of an increase in the last quarter itself. Now, what more can we do? We are still studying.
Okay. So this 41 rupees corresponds to what was the average price for April, May, June?
So last year, average for us at Secunderabad was around 21 and a half to be very precise. The exit for June quarter, or let me say the beginning of July, I think the price is already 40 rupees. 40 plus.
Okay. So when we say 41 rupees, what will be a like-to-like number for April, May, June?
The April, May, June on an average was around 36.
36. So it has moved from 36 to 41. Okay. And have we taken any price increases in July to offset this bit of cost inflation?
Not yet. Like I said, some portion we already built into our prices earlier itself because we suspected that the prices are going to move up, right? Some portion, balance in case we want to take, that is still being studied, like I said.
Okay. And there were talks about Morbi players increasing prices and the organized players also looking for price increases. Has Morbi moved ahead on this, or is it something still we are waiting for?
Ritesh, the last price increases in Morbi were in the fourth quarter. We had taken a price increase in the middle of April. Specifically, there is some talk in Morbi because there is an expectation that Gujarat Gas will be increasing their gas prices from next month. But as you know about Morbi, a lot of talks happen, but typically price increases are something which the Morbi players don't take, or even if they announce it, the history is that they kind of roll it back very soon. So as of now, nothing. If the Gujarat Gas price increase happens in the month of August, then there is a likelihood that there will be price increases. But as of now, we have not heard anything.
Perfect. That's very helpful. And just one last question. Is there any scope of GST change on the fuel, and will it likely benefit us, or is it more talks still?
So Ritesh, we don't know about the first thing. It has been something which has been talked about by the late Finance Minister, Mr. Jaitley, and then also by the Prime Minister some time back. But there's nothing which has happened yet. If it were to happen, then definitely it would be margin accretive for all tile companies, including us.
Great. Thank you so much, and congratulations for a wonderful job on the balance sheet.
Thank you, Ritesh.
Thank you. Participants who wish to ask a question, please press star and 1 on your touchtone telephone. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
Sir, I wanted to understand that in your investor presentation on page number 5, the average selling price is mentioned, wherein our trading sales actually enjoys a higher average selling price than our own manufactured. So in that case, then sir, why don't we just outsource more and increase our realizations rather than doing capex and selling at a lower price?
Ritesh, Keshav, my bad. Keshav, everything is, so it's not, everything is not pricing, let me say that way. Yeah, it's more to do with the margins that you make.
Can I answer that question?
Okay, I think Aditya wants to talk. Yeah.
Keshav, so the product range that we sell, that we buy from Morbi outsourced versus what we produce in our own facilities are different. So it is not one homogeneous tile one homogeneous product which can be compared across outsourced and in-sourced material. We buy, for example, the earlier question of Rohit, I mentioned that these large slabs is what we buy out of a moldy which are outsourced. So it's a totally different set of products. You can't compare the margins or the ASPs between the two things. What I would like to draw to your attention to is that over the last 4 quarters, our own manufacturing ASPs have gone up by almost 20 rupees, from 228 rupees in quarter 1 to 246 rupees in quarter 1 of this year. So that is almost a 20 rupee increase, and this has happened because we are focusing very aggressively on improving the product categories that we sell out of our own manufacturing units. All the new categories that I've been talking about in the last 2 or 3 earnings call are all categories which have ASPs significantly higher than the average ASPs of our manufacturing units.
Okay. Sir, and also wanted just to get an idea about the remaining 3 quarters of this year.
I hope I've answered your query.
Yes. Sir, so wanted to understand now that, sir, starting from the second quarter, so you think that we can exceed what we did in the fourth quarter, around 180 crore of top line in the second quarter, or sir, when do you think, since there might be a seasonal element also in fourth quarter, so you think that things are looking up so that we can exceed that amount, and when can we do so?
So Keshav, yes, fourth quarter has a strong seasonality, and you'll find all tile companies have a very high percentage of their sales coming in the fourth quarter. That's one. On the outlook front, I said in my opening remarks that we see markets have opened up, construction activities has resumed, and we see the general sentiment in terms of demand has improved dramatically since over the last couple of months. So definitely quarter 2 has to be better than quarter 1. On your specific question about whether we will do 180 crores and when we'll do 180 crores and all, we don't give out future projections, so please excuse me, I would not be answering that part of your question.
So fair enough. Sir, just wanted, sir, once to understand, so that the market leader is doing the 3 times our operating margin, I mean in percentage terms. So when do you think we can catch up with them, and how big really is the pricing differential between us? Because thrice the margin, for that I think either the price, because by and large the cost structure would be the same, I mean the cost of manufacturing, etc. So I mean then the only thing that remains is the selling price and maybe the margin that we are giving to the channel partners. So basically we want to know, so that how soon can we converge, and so when can our margins reach the range that they are doing?
So Keshav, first thing, where do you get this number of 3x EBITDA margins? I think it would be about 2x of ours. It is definitely not 3 times. That's one. Secondly, in terms of, as I said earlier, the tile industry is not one homogeneous product. We are selling tiles from 8 inch by 12 inch to 8 feet by 4 feet tiles, and many sizes in between them. And then there is ceramic and vitrified and full body and all. So one of the reasons why the ASP difference is there between us and the market leader is also coming in from the product mix, not just the channel margin play. They sell a lot more vitrified than we do. That is a big contributor to the higher ASP. I'd like to share one figure with you. Just give me a second. I think if you were to compare the ASP difference between ORIENTBELL and the market leader, I think 4 or 5 years back, this number was about 135 rupees odd. And today it would be about less than 100 rupees, say 95 to 100 rupees. So it has been narrowed down, and bulk of this narrowing down has kind of happened in the last couple of quarters. We have not only increased our ASP 6% over quarter 1 FY21, we have also sequentially grown by 2% over quarter 4. So that's it. I've answered your ASP question. And also the difference in EBITDA. There is a difference in EBITDA, but as our product salience, our vitrified salience improving, I think we will be narrowing down this gap.
Okay, sir. Best of luck. Thank you very much.
Thank you, Keshav.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1 on your touchtone telephone. The next question is from the line of Rohit Suresh from Samitva Investment. Please go ahead.
Hi sir, just a follow-up question. What will be your capex, any guidance for the current year?
So, so we've already announced, like I said, there are 2 projects ongoing, the bigger ones. That's 20 odd crores in total. Beyond that, there could be another 8-10 crores of sustenance capex also, which may happen. I'm counting the displays as well in for this. So maybe around 30 odd crores is going to get capitalized between now till April.
Sir, and majority will be through internal accruals, right?
Yes.
Okay. Thank you so much.
Most welcome.
Thank you. The next question is from the line of Apurva Mehta from AM Investments.
Hi. Sir, just wanted to ask about the gross margins. We have improved a lot on the gross margin. So is this gross margin sustainable going ahead, seeing the inflationary pressure which we are having? So can we, maintain this kind of gross margin?
See, Apurva, I think, cost is one side to it for sure, and the other is ASP. ASP, like Aditya mentioned, I mentioned, we have taken increases. Let's see what more we can do. What more we can push in terms of retail, what more we can push in terms of the product mixes, etc. Large portion of what you see on cost is already in, except, what can happen with gas. Right? Okay. So from that point of view, I think we are more or less in line till now sequentially. Yeah. So our gross margins, like you said, are more or less similar. It all depends on how the situation now evolves. Right? Our efforts would be definitely to keep it in line or even better. Yeah.
Okay. Yeah. Hello. Hello.
Yeah, please.
Yeah, and on the OBTB side, how is the response, and what is your long-term target to where we should see next 2-3 years down the line, and how important is it for our growth and getting more towards the wholesale rather than retail side? So how important is this segment?
So Apurva, this is an area of strategic focus for us. Last year we added 68 OBTBs, which was the highest ever that we have done in the history of the company. And this number got added in a period of just 9 months or even less than that. To give specifically how is it responding, it's been doing quite well for us. The increase in ASP, the higher sales volume is also attributed to our improvement in displays. I'll give you a number. Last year in quarter 1, 23% of our total sales were coming in from OBTBs. In quarter 1 this year, that percentage is up to 30%. 30%, sorry. So these displays are doing well for us. It is not just the number of OBTVs that we have been sharing in our investor presentations. There is also a big change in the qualitative aspects of these OBTVs that we are putting up. We are going in for much larger OBTVs, much larger floor areas. We are going in for bigger towns, and we are also working quite aggressively at the older OBTVs to refurbish and refurnish the displays in the older ones.
And any capex required, or are we putting any money in this OBTVs, or it's all franchisee based and we don't have to invest anything like that?
I wish Apurva it was the other way around, but yes, we have to put in money, both capex and opex. Some of the permanent fixtures for tile displays and all, which are the cassettes, etc., is where the company puts in capex. And of course, there are other expenses in terms of branding and etc. and all, which go through OPEX.
And our branding cost, which was now at 2.2% in Q1. So, what is our target for this year? What will be our branding expenses, marketing, branding, all these things will be?
So Apurva, we don't have a target which I could share with you in terms of that, but it will be significantly higher than what we did last year. You will see that in Q1, in spite of the lockdown and all, we decided strategically not to curtail marketing investments, and that's why compared to last year, I think marketing investments in Q1 are almost double of what we did last year, or maybe more.
Toward 1.9 crores.
Yeah, so it's almost 2.5 times compared to last year. So brand building is going to be a focus area, and as I said earlier, our vision is to make tile buying and selling easy for all stakeholders, starting from our own sales team to our channel partners to the architects and the consumers out there. And this is something which the marketing team is leading, and we will continue to invest in marketing.
And how do we see when this opening up of things, June, July sales coming in? Are there any improvements? Are there any material changes in the demand side? Can you throw some light on it?
Yeah, Purva. So I will again. Your earlier question was on marketing, so let me pick up an example from marketing itself and a KPI from there and can share with you.
Yeah.
We are a digital first company. All our investments go into digital marketing. So we are able to measure things at a very granular level. So OBTVs, which also you talked about, in the month of June, all our OBTVs put together, we had 5.4 lakh searches for those OBTVs in the month of June. Sorry, I'm mistaken. The highest last year was 5.4 lakh searches, which was in the month of March 2021.
Okay.
In the month of June, this number was slightly higher at 5.6 lakh. So we have seen that the search volume for our OBTVs has come back to last year highest, slightly better than that. However, what we are seeing is that these searches are not translating into action taken by the customer.
Okay.
So a lot of searches are happening, but still in the month of June, customers were a bit hesitant to go out and visit OBTVs and go to these shops. We are hoping that the way search volume has come in, the action taken by the customers would also improve in July, August and all. The sentiment definitely is improving.
Okay, thanks a lot, and wish you all the best.
Thanks, Apurva.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Sarvesh Vodani, who's an individual investor. Please go ahead.
Yeah, sir. Hi. Sir, my first question is, let's say, assuming there were no wave 2 and there were no lockdowns in the Q1, what could our sales have been, just hypothetically? Like, what kind of volume did we lose or anything on that front?
So, Sarvesh, you asked me such a difficult question. I have to be Nostradamus or somebody to answer that, but I'll try to answer it in a different way. See, in the pre-COVID period, our long-term ratio between April, May, June sales versus Jan, Feb, March sales used to be about 64-65%. And this time, we have done 48%. So, April, May, June 21 versus Jan, Feb, March 21. This difference of 48 to 64% is partly because of COVID. If COVID had not been there, this difference should not have been there. Maybe we could have done slightly better also.
Okay. And sir, on your AGM, at your AGM yesterday, you mentioned that you are looking at the Western Indian market quite aggressively. So if you could throw any light on when do you see it contributing meaningfully to our revenues, and what kind of work we are doing and what kind of expenditure or anything on that aspect?
So, I'll talk about the work that we are doing. As I said in the AGM on Saturday itself, which is just 3 days back, we have launched a new product range on GVT for the Western India market. We have strengthened our product side. There is a lot of work happening. We will be strengthening our product portfolio for Western India over the next, continuously every quarter. So that is one piece we are working on. The second area we are working on specifically for West is strengthening our field force. We have added manpower over the last 6 to 9 months in Western India, with some senior level people also coming in, augmented with more people at the junior levels also. This is the second thing which we are doing. And once we start getting some traction, third thing, we have also started focusing aggressively on new OBTB opening in Western India. Hopefully over the next 6 months, we will see a result from there. For example, last year, out of the 68 OBTBs that we had opened, the contribution of West was just 4. And we hope that this would be significantly better in this financial.
Okay, sir. Thanks for that. And you just mentioned that your ASP has moved up 6-7%. So won't there be a element of cost inflation here as well? Because you said that all the competitors, including you, have raised their prices. Or do we really see our we are selling more premium tiles? So what's your opinion on that?
Can you just repeat the question, Sarvesh? I didn't get that piece.
Okay, sir. So you mentioned that your ASP has moved up versus on an yearly basis and on a quarterly basis as well. So how much would this be an element of the price hikes we have taken, or this is purely, do we see this our selling or whatever we sell the tiles, it is moving towards more premium side?
A good question. Thanks, Sarvesh. So in April, as I said, we had taken a price increase in April, which was roughly 2% price increase. So out of this 6%, I would say 1/3 is because of the price increase and 2/3 is because of the improvement in the product portfolio which we are selling.
Okay, great. And so whatever capacity we had, and after this capex we are doing, which will be commissioned in the next financial year, what kind of peak revenue do you think we can do? Can we do more than 1,000 crore, 1,100 crore, something like that?
I think, Sarvesh, you had asked exactly the same question last time also, if I remember right. So I think the answer to that is yes. because we have one of the lowest, on one hand, one of the lowest percentage salience of outsourcing amongst most listed players. So our sales out of Morbi is less than 30%, and there is a lot of opportunity to grow, to source from Morbi without capex. On our own manufacturing also, we have significant headroom to grow. Last year, on our own manufacturing, we had done about 340 crores. How much was it, Himanshu? You have the exact number?
On own manufacturing last year, you say?
Full year?
We would have done, something close to 340, 350. Yeah, 340, 350.
So about we did about 340, 350 crores out of own manufacturing last year, and in spite of a loss of one full quarter, and our capacity utilization was just under 90%. So my sense is that our own capacity, especially with these three projects that we have, capex projects we have done or we are doing, should be able to give us about 650 to 700 crores of revenues, and you can top it up with Morbi to the extent that one desires. So definitely 1,000 crore is something which is doable today, or will be doable today over once some of these capacity capex projects which we have taken come on stream.
Thanks, sir, and all the best.
Thank you. Participants who wish to ask a question, please press star and 1 on your touchtone telephone. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question is from Keshav Garg from CCIPL. Please go ahead.
Sir, just wanted to get a general idea that, sir, since our competition, so that they are far larger than us and they have some kind of first mover advantage, as in they are already well established, the brand is well built, network is well built. So then how exactly are we trying to match them? Like, are there some geographical weak points that we have spotted wherein the competition is weak and maybe we can enter those in a big way, or so on maybe in terms of new product development that is not I mean the competition is not selling as of now. So are we having something like that?
So Keshav, our strategy is not focused on our competitors, but it is more focused on our consumers and these various stakeholders in the purchase process. So we will do all that you have talked about, which is in terms of our weak geographies. I've already spoken about West. We are investing there. In terms of increasing our product categories that we sell, I talked about having added 6 new product categories in the last 4 to 5 quarters, which have contributed about 9% of our sales in Q1. So all of this will get done. All of this is being done. But the one thing where our biggest focus is, or which differentiates us, is how we are going about doing these things. We are focused on making tile buying and selling easy for every stakeholder, starting from my salesperson to my channel partner to the end consumer to the architect, everybody. And this is where I think we have taken a head start. This is where we are differentiated, where our competitors do not have There we are far ahead of competitors. I will give you a certain set of numbers. We have an app for our channel partners, for our dealers, which we call OBL Connect. And last month we had about 11,500 views on this app. This app gives the channel partner information about OBL, anything and everything he wants, from his billing, invoicing, balances, credit notes, company stock, etc. is all available on this app. So last month it was 11,500 views, and this month in July we have already exceeded that number. We have a lot of visualization tools, tile visualization tools, which are part of our dealer app, OBL Connect. And the number of views on these visualization tools, number of times these tools have been used in the month of July is double of what it was last month. So it is not just what we are doing, which is pretty straightforward: increase distribution, increase displays, add more product categories, focus on vitrified, all that which we are doing. But how we are going about doing this is, I believe, unique to ORIENTBELL.
Sir, and also, sir, in the first quarter, sir, please give us some idea that how much the domestic tile market has shrunk.
We are the first one to come out with results, I think, for the last 4-5 quarters. So it's very difficult to say how much it would have shrunk. But my sense is, what is your baseline? Are you talking from in comparison to quarter one of last year?
No, sir. Sir, maybe quarter one of last year.
Okay, quarter one of last year. So my sense is that it would be maybe 40 to 55%.
Okay, sir. Okay, sir. Thank you very much.
Yeah, thanks.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to the management team for closing comments.
So, thanks all. Thanks for your continued interest and support to OBL. We in Pareto are here. If you have any more questions, feel free to connect with us offline, and we should be able to come back and answer you whatever we can. Thanks all. I think, Rishabh, we can close the call now.
Sure, yeah. Sure, yeah.
Thank you very much. On behalf of ORIENTBELL Limited, that concludes this conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.